Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So we're seeing some mixed markets around the world this morning as Europe tries to stabilize after 3 down days. The Nikkei is down 2.2% after making 6-year highs, and China is trying to stabilize. So we have lots of divergences overseas.
Yeah, it's like you have to pick your spot. It feels like just when the world started to get extra bullish on Europe, it had a cute little pull-in. So after 3 down days, it held in there. And then as far as the Nikkei is concerned, it's been going up as the yen's been going down. The yen bounced, and now we're down 2%. You look at the chart here of the EWJ, and you'll see that there's been a lot of different types of entries and exits. This was your top, this was your bottom. It's been trending higher. It actually the EWJ is pulled in before the actual move lower yesterday, so that's kind of interesting, and bottomed. So with that being said, I think this 1173 is a pretty key level there. And as far as the FXI, it's 2. It's trying to trend. I think Goldman put this as one of their top picks for 2014. Here was that double bottom over the summer. Nice move, consolidation, another nice move, and now it's trying to hold this level. So at this point, people are trying to either make a little bit of money for December or trying to figure out how they could position themselves in 2014 for certain themes. And I'm not ready to put out my 2014 themes because I think we still have a lot of stuff going on between now and the end of the year.
All right. Well, in terms of our markets, our futures are up small this morning after 3 down days in our markets. We did trade a little off our lows yesterday, but now the focus will turn to a lot of data we have coming out. We have ADP and Beige Book today, third quarter GDP and claims tomorrow, and on Friday, of course, non-farm payroll. So could any of this potentially throw us off?
It could all throw us off. It all depends on the strength and then how the market will deal with it. About a month ago, or almost a month ago, we had that strong jobs number, and first the market was lower, and then the market actually liked good news. I think at some point it'll be really good when the market will go up on good news because that's overall better for the economy, not just going up on QE and not just going up on the Fed. But we're in the middle of this push-pull where if we do have better than expected news, maybe they dial back the pace of purchase, and the question is, how will the market handle it? Will there be enough buyers? Will there be enough volume? So at this point, it's a tricky spot in the market. After the S&P is up 25% plus for the year, I don't think macro investors care if we're down 2 or 3% or even up 2 or 3% in the last 3 weeks of the year. But if you trade for alpha and you trade for P&L, you better believe that red dog reversal on Friday or that next 2-3% is going to make a difference for this month.
Well, so why don't we take a look at the levels then that we should watch in the S&P?
Let's do that. When we go to the SPX, you'll see right here, this is the trend, and it's been real strong since November, where you've had about 3 or 4 different navigation points. You had one, this May 2nd outside day led to a 5% correction. Then you had a move right back up. Then you had this head and shoulders top that also led to about a 4% correction. Then you had this breakout failure that led to about a 3% correction. And we've had a heck of a move all the way from that area. And if you take a closer look here, you will see that that was very tradable, right? You had your red dog reversal. Then look at the engulfing nature of this bar that ignited a move through this descending channel. And then you saw some commitment above it. Then we took out the prior highs and did not trade back below it like you did here, where you broke out and failed. And now, Friday you had a little red dog reversal. Let's even take a closer look here so you can see the green and red bars. That was a sign that perhaps you should take a little risk down, considering look where we came from. Then on Monday we traded below the prior low of 1803. And then all of a sudden, boom, 1787. So we quietly had a 25 handle pulling off the high. So the question is, was that it? And we've been trained to pretty much buy on 3 down days. So the question is, does it change? And I think what you got to look at here is the 21-day. We have 1787. If we do some sideways work right here, perhaps we can go back to highs. But if we don't really have any kind of bounce, or the banks don't get a bid again and high beta doesn't do well, you could see it break this, and who knows, maybe this correction gets a little bit deeper than anyone would think of right now.
Well, in the meantime, as we look for potential setups in the market, let's take a look at some social media stocks on our radar. Facebook has been trying to act better. Do you think it could go again?
Well, this is something that we've been watching on the floor because it's been really good to us this year. We targeted before that earnings when it was around 25 in that cup and handle pattern, went as high as 54, and then all of a sudden it did correct down to 44. And now you have the tale of 2 different types of charts here. So if you look at them, you will see that here is the gap after earnings that led to the top around 54. This is when it got a little faulty, right here, when it couldn't hold the gap, and it's been trending lower. So if you look at this trend here, this trend sort of got broken right around there. So now we're going sideways. So I think most traders will trade or be long, and I'm long a little Facebook versus this support around 46. And then if we're going to get any kind of momentum, it's got to take out this 47.30, 47.50 to get to this 49 area. But if it were to give way here and roll over, then all of a sudden all the bears are going to start saying, oh my goodness, now it's time for this head and shoulders top pattern to really trigger and give us more downside after we just retrace this move. So I'm looking at it more neutral to positive versus neutral to negative, but if it were to break and close below 46, I'm out of that trade.
Oh, all right. How about Yelp? Yelp's been hovering around its 100-day. What level would you say it needs to clear then to pick up some momentum?
This one too has just been like rolling down, but a lot of these leaders, they don't let it fall apart. So it just, I think, lacks a catalyst right here. So you look at Yelp, you'll see the chart. It's been an unbelievable move for 2013. It did trade below this key support right here and then tried to reclaim it, and then it's been just dribbling lower. I would say short term, you have this small little wedge right here. So if you want to trade it just for cash flow, if it were to get above this spot here of 60, 61, perhaps it tries to retrace back to these moving averages. But if the market gets more weakness and some of these other names start to fail below this 58.12, you could see a move back down, to correct more, considering look where this stock came from this year. What a nice move if you were involved in Yelp for the majority of 2013.
Well, Zynga has had a couple-day pullback into the 21-day EMA. Do you think we could get a bounce here?
Well, this is a spot where, if you sold some into the 450s after a 50-cent move, nice percentage, you have the luxury of buying back. I think some of us on the floor, though, we bought that 455 thinking it would be $5 sooner, and it hurt a little bit. So anyway, with that being said, in perspective, if you look at the chart of Zynga, not how you traded it, you will see that this was the level that it broke out from. You really never want to see like a breakout failure, so it's got to hold here. This is the test. So here's 407. If it were to hold this 407 or maybe a tiny bit lower, $4 and reverse, I think that would be good for the December trade, perhaps into 2014. If it were to fail here and come back lower, then I think people will have to wait for a reset. But overall, from where it came from, in the start of this move in November, from 350 to 450, that's a big percentage. It's only given back about a third. So this is a key spot to watch here for Zynga. Hopefully it holds this spot so it can go again. This is that area.
Well, you always like to look for strong stocks in the sea of red, and Twitter was actually one of them yesterday. Showed some real relative strength, logged in almost a 1.5% gain, shaking off any naysayers. What do you see with Twitter right now?
Twitter's tough because it had the new issue, it had the hype. There was really no opportunity for anyone except for if you were in the deal from whatever, 26, 27, then you got paid. So now it's building a base. The question is, with new issues, how long does it take to build the proper base where you could actually put some longer term money to work, and it's still in that process. But there are some trades along the way, and yesterday it did show a little relative strength. You look at the chart here, and you'll see this is IPO day where it opened up and did absolutely nothing that was good except for little micro trades, and then here you had downside follow through. Then it tried to reverse, failed, tried to break down, came back up, and now it's stabilizing. So, short term, if you want to be in adverse 40-40, I think that makes sense. And if it were to start trading above 42, perhaps some people start to jump on the Twitter bandwagon as the next resistance really doesn't start coming back into closer to 44. So that could be a trade here, a little downtrend as well. So yesterday I nibbled near the close, and I would say I'm going to try and stay with it and see if there's any better action, but it still has a lot to prove.
All right, coming up, we're going to go in the trenches with high beta tech stocks that are continuing to get some attention. But first, a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches with high beta tech stocks. Let's start with Apple. Nice move yesterday after some upgrades. Was actually able to put in a new high. Should we be looking for upside follow through today?
It would be nice, considering yesterday it really did show a lot of strength, and the stock's been showing a lot of strength for the past 2 quarters. So if you've been with this as a macro investor, you've gotten rewarded. If you've been trying to navigate the trends, you're also, there's a lot to like here. If you look at the chart here of Apple, you will see that here is the low that was put in June. Here was that gap up after earnings where finally it changed its complexion, gave you a nice move, came back for the retest, had another move. This was that downtrend that broke through, and then here was your last flag pattern that ignited through Thanksgiving. Thank goodness for that. That gave us a lot to be thankful for. And then a little closer up, though, a lot of people got out on this little reversal, including me. Okay, right there, you had a red dog reversal, opened up, traded on the lows, thinking it was going to come down, and then it had that news yesterday from UBS, whatever. So the question was, how did you get back in? So I'm going to show you a small tactical method on how to get back in. Look at the 5-minute chart of yesterday, okay, just real quickly for tactics. So if you came in flat Apple and you wanted to weigh in, look what it did all day long. It flagged all day long, held its gap up, consolidated this entire move. So I remember, I think I bought right around 561. Then, it started to go higher. It took out the afternoon high and gave you a move into the close. So tactical cash flow, not bad. Coming into the morning call, it was like at 569, so you had a chance to sell it while it was up a little bit. And I still think if you didn't, it should hold in there. And if you go back to your daily chart, everyone's like, where could Apple go now? Look at this gap that's all the way up here in Apple. I do think that at some point this gets filled, and this gets filled up to 585.
All right. How about Google? Was able to bounce off its 8-day EMA yesterday, went as high as 1,063, but did give back most of its intraday gains, dragged down by the overall market. So is this just a sign that it might need some more time before it can really get going? Well, again.
At this point, there's been lots of little trades after earnings, but overall it's been strong. You look at the chart here. This is the gap up in Google. This was, remember this little trade? It was really nice. Let me get you the line versus the slant there. That was a nice one, and then it consolidated again. Then remember when we had this descending channel here for a trade, what gave you a good one. Then you had a false breakout right there, and then it finally gave you a clean move. And then with the market, it came in a little bit. So I would say into this area, it's going to be interesting. I think short-term traders like myself or intermediate-term traders will say, okay, it should hold this 1,040, 1,042. It would be even better if it did a red dog reversal at yesterday's low today to keep it on our A list. If it starts to get below this, then you have to look at the 21-day, which is 1,031, and this 21-day hasn't been tested since earnings. So that would mean that it's starting to lose a little momentum, but still fine on bigger time frames.
How about Amazon? Amazon just had a 2-day pullback into its 8-day EMA. So after 2 down days on your 3rd day, would you just wait and see, let it figure itself out?
This stock shows you how bad I am at shorting things. I tried shorting this on that gap up on Monday, and I think I lost money. And now I look at it now, could have been a good trade. So it just shows you we all have things to work on. And if you look here at Amazon, you'll see, here was that, gap up after earnings, came in a little bit, and then started to get back moving. This was your breakout trade. I tried shorting it here, did not do so hot. And look what happened next. So at this point, it'll be interesting to see if you get some kind of reversal. I'm going to look at this today to see if there's a bounce type opportunity. 383.10 is that pivot. If it were to trade below, come back above it, I will try and get long, because you know what? Since basically early November, this has been holding the 8-day. So this is a spot to look at. If it doesn't hold this, then the market overall is probably coming in a little bit lower. And by that time, the 21-day will be right back at this retest of this 370-ish. So today should be interesting for Amazon to see if it can hold in there.
Netflix hanging in there as well, resting above its 8-day EMA. Would you say that this is constructive for the stock?
Yeah. This one turned around and it had a better bounce yesterday versus just say the Amazon and the Google, where Apple was just strong. And if you look here, it's holding the 8-day. Trend's still there. I do think I saw something on the wire about streaming in France, so maybe that puts it in play and helps it. So that level here from momentum is 367, and it's trending. This has been trending higher, and as long as it stays above this trend, stay with it. It's trying to flag again. Not a heck of a lot of momentum. Even when it did break above this area, it gave you a trade, but it wasn't like a blockbuster trade. So, still in stride. I would take trades and not bet big there.
All right, let's do some quick hits here. Gotta talk Tesla after that monster move yesterday, more than 16.5%. So I'm sure hard to chase it here, but definitely back on traders' radars.
Yes, yesterday you had a gap and go after closing the prior day on the low. It's been out of play, and hopefully this gets it back in play, which is great for traders because we love movement and this stock moves. If you look earlier in the year, this had a great trend here, had a nice trend that held at 21-day for the majority of the year. Here's where it changed its complexion. Markets made new high, it didn't. Broke down a little bit, rallied into earnings. If you don't take stock into earnings, like which I usually don't, you miss this part of the downside move. And now if you take a closer look here, here was your lower pivot. Look at this little red dog reversal. So if you got long from this red dog reversal, you actually enjoyed this really nice move because it never violated it anyway. You had a gap and go. It traded through what could have been resistance around 135 with power. So now you want to see it hold up. You want to see maybe it hold 140. This type of igniting bar puts it back on the radar to perhaps test this 154 to 158, at some point. So I think traders will put this back on their go-to list, whereas in here, it got a little wishy-washy.
Well, from one Elon Musk stock to another, Solar City's pattern is getting pretty tight. Is this on your radar for a breakout?
Yeah, Solar City, if you look at this chart, it's a solar name. It's been strong. You got to like something that has also Musk attached to it. Here is, look at this, guys. Another red dog reversal. Never saw this before. It corrected, came all the way down, made a new low, came back above 43.70. If you've been long since then, congratulations. You're learning how to swing this position. If you just used it for trades, that's cool too. Now it's going sideways. Moving averages starting to catch up. So for this stock, if it gets above 53, I think it can continue. And if other solar names in the group start to get some momentum back, this should play along.
Names perhaps like Canadian Solar, which had a nice reversal yesterday after a few days of rest.
Yep, just like that name. And you look at the chart here, nice relative strength yesterday, came back up. Got to get above 30 to get interesting, so I would put this on the radar today.
And over in casinos, Las Vegas Sands finding support along the 8-day EMA, so that's healthy here.
Yeah, except for if you buy high like I did yesterday. Every time I try and chase this thing, it comes in and it's been tricky. And the market, I think, is not just ready for names to break out, especially, bigger names like LVS. So at this point, it's in the game, but we need to make sure the market gets its footing before they let stocks break out. You look at the chart here, still looks good. I think this was me trying to trade it above here, and now, kind of reversed, it's in there. It needs to really hold above this 70 area and go sideways to make it look more like an A+ trade to then get back above 72.5.
Well, so in this sort of wishy-washy market environment with all the data that we have coming in, what will you be focusing on today?
Just going to try and make some money. I'm going to look at these setups, and I might stay with them, shorter term than usual. If we've been down 3 days, typically we've been able to buy after 3 down days for a bounce. I think, that's the trade that everyone's trained for. And if, the market likes to make everyone look as stupid as possible, and that means, it might give you a 4th down day, or who knows. So just don't. You want to stick with the trend that's been working, but you also want to, have a grain of salt there. And we've been up a lot this year. We're heading into December where, lots of people have locked in gains, but you still have people looking for trades, looking for ways to catch up. So I would just, be a little bit more specific and just watch to make sure that pattern is an A+ or an A trade in order to be involved. Don't look for the B and C patterns because it's hard enough to find an A pattern.
All right, and that's your morning call. Happy trading. Have a great day.